What is going on with AirBNB stock?
So I noticed a few days the Airbnb has come down 20% off its high of 154.95, all the way to closing today at $124 even. Looking at this on Monday, August 21st. This brought their PE ratio down to 36.5. Seemed pretty cheap for this company that has been growing really rapidly for many years.
So I decided to do a deep dive. Airbnb is a really great company. Their CEO, Brian Chesky, is brilliant, really great leader. Um, COVID did some really weird things to this company. And frankly, it kind of ran away, and I thought I would never get into it. But with this pullback, I decided, let's take a look. Let's see if this is actually worth investing in.
So the first thing I want to look at for a growth company like Airbnb is revenue growth rate. So I have here in Y charts pulled up a chart of quarterly revenue. They most recently reported here in June $2.484 billion in revenue. That's compared to June of 22, 2.104. That's about an 18% increase in revenue, which frankly is a little bit slower than Airbnb has been growing, uh, certainly after the pandemic. But you almost expect a little bit of a give back after such rapid growth there for a few months. But even at 18%, that is still a pretty good top line growth number. We also want to look at the earnings growth of the company, which long term might be a little bit more important than just top line revenue. So Airbnb hasn't really been profitable for long, but their earnings growth has been tremendous. You can see here March is kind of an error because the previous March they did lose money, but in the June quarter they reported a 75% year-over-year increase in earnings. The last thing I would like to take a look at is the balance sheet of the company, make sure that they're in a strong financial position. I'm not really too worried about this, but it's always best to take a quick look. So we're going to pull up the balance sheet. And here's what we're going to look at. At the most recent quarter, I want to look at total current assets. Well, these are in millions, so this is actually $20 billion. $20 billion in current assets. I want to compare that to current liabilities. $13.6 billion in current liabilities. That means they have plenty of cash to take care of their immediate needs in the business. The other thing I want to take a look at is retained earnings. Uh, I want to make sure that this is going up. So you can see this is really negative and has been getting larger every quarter. They just finally turned that around this last quarter. So they might be in a turning point in the business to where they're going to be able to start actually returning cash to investors.
So I would still want to read that most recent quarterly report as well as their most recent annual report before definitely moving forward, making an investment in this company. But with a quick look today, I do think that this might be something worth buying. It's on my radar. I'm going to be doing some more research. What do you guys think?